All right, all you devils out there, happy Friday. Sam here with you. Friday the 25th. It's just now past 1 o'clock here now. We'll, of course, we get a look at get an updated look here at Bitcoin. Oh, well, we're out here on a daily chart. Bitcoin continues to be elusive in nailing down a count that we could probably all agree on. I'll give you my primary here. There's not a dramatic amount of change in terms of the larger structure here, but when we get into the subdivision, there's some... Well, I think this has required a bit of an adjustment to the counts we've been looking at based on this price action we're seeing. Or not. It's very tempting to get enthusiastically bullish here as we see the market, starting to kind of turtle head, well, at least past the midline here of this range. Right? We looked at this last week. Now I'm accommodating the count here and putting the 3 here, and we talked about this last week. I'm putting the 3 here on this pivot here. I'm just drawing this kind of to frame it up as best I can. So this would be A, B, C to give us the W here, X. And now in my view is this, again, this is my primary, so I reserve the right to change it if the market forces it, that we've gone W, X, Y. We're in the process of the X, and then we're looking for another 3 to come down here and give us the Z, and then balance this out. The one thing that I will say here that I think we're past the point to where this is something that would be controversial. Throughout the entire sideways motion here, my view was that while, I suppose it's still possible the 4 is over here. This becomes less and less likely. The reason I was never getting bullish here is that we didn't have balance between the length of time of the 2 to the 4. And I think you're seeing that demonstrated here. Now, what's the cause of that? Well, as Elliotticians here, we don't really care. What we're looking for is patterns we can recognize here that are prone to repeating because people tend to do the same thing over and over again, particularly when it relates to their money. So the balance here seems to be showing itself here but now you'll note here, of course, I've changed to, just because we've drilled that set of median lines to death here, I thought I'd just go to traditional Elliott channeling. The implication is the same here, that there's another leg that we need one more time. Now, so we start to put some things together here. First note here, this is the 1618. So all I'm doing is taking the length of time of the 2 from the proposed pivot here of the 3 here, right on this pivot here, and just going over in time, right? So here's the 1618, which is the end of April, and then out here we're towards the end of the summer here. So it's possible this all slides further over here. Nobody likes the sound of that here, but if this is going to go through an A, a B, and a C, well, nothing says we have to do it exactly at 200%, but somewhere in this, if we get past the 1618 and we're not doing this, I'd be anticipating that we're going to push back here towards the end of the summer. Now, again, as we looked at it last week here, if I just kind of emphasize it here's the midline here. So again, little turtle head past the midline, but I don't think it's quite time to break out the bullhorn just yet. Believe me, I'm dying to do it, but it's just not there yet. Well, let me rephrase that. It's possible the 4's in here. Shit, it's possible the 4's here. We aren't going to know here until we get resolution and we come out of this and we see what we get. So until then, you just got to work with what appears to be the most logical, what appears to fit best, right? As Elliotticians, we're looking for the best fit, and then letting the market lead our analysis as we see how it responds. So I'm going to now take, let's see, let's hide this so we get the time off of that. Having made the point here, I'm going to pull that off. But again, I thought it was a little bit harder to see. And I know you can't see into the count here. We'll get there in a second. Still right pretty much at the midline. So with that said, right, knowing that there's a very real possibility that we have some additional time to burn here to get it over here for the balance before, right? Again, my implications here of this counter that there's a pretty massive leg still to come. So don't misinterpret what I'm saying as being bearish. I mean, even though if we're going to push down here to challenge these lows, and Oh shit! Here, so we just, we've looked at this so many times. I've just reluctant to be. Oh, I want to give you something different here in a sec. We've just looked at this to death, but then, of course, I know every now and then we get some new people find the site and kind of looking at our analysis for the first time here from just this pretty traditional Elliott. This zone down here at the 23.6, which has been pretty solid support. Could we be done? Sure, we could. Absolutely, we could. But this looks to me like that's where we're headed, and then we go, right? Then you can buy here aggressively. But my view, right, this will be the final test, and kiss goodbye before we take off. So that's there. Now, the one before we leave this and we dig into that subdivision here, this is pretty striking. So it's constantly a battle to try and see if we can find some footprints of algorithms that we can identify. And of course, the measured move algorithm here, we've drilled that to death. We all know about that, right? Or anyone who's, well, either members or YouTube subs know my view on that. That's the DNA of the market. That's how it moves, not why it moves, how it moves. But there are other algorithms in here as well. One we've talked about, which I just teased you with here, is the Wolf range, which is just range expansion, right? And I add that name to it because the guy who taught it to me. Take a look at this. Oh, where are you? Over here. So all I'm doing here is just I'm using the length of the first wave, right? And then I'm just looking at range expansion. Well, there it is with, if we're just, and I'm tick perfect on this, the length of the one. And I'm projecting. Now, you have to do this I'm in log scale, right? So to match this, you have to do this in log scale. Well, that's pretty darn good here. So if in terms of range expansion, if this is our initial range, this being the halfway point, and then here's 100% of that range, well, yeah, we're not to the tick here. But we sure got mighty close here. And if this is all part of that correction and this is all overthrow here, this warrants a look. Now, what we can do, though, where this gets really interesting is if I refine this further. So right now, I'm just looking at the 100s, and with projections up to, there's the 200 up here, would put us at, we'll call it 275. Well, interestingly, if I add the 50s to it here again in log scale, so I'm going to change the template that I'm using here. Let's see if it'll let me do it. Now look at it. Actually, I want all the 50s here. So let me get. I want that one. There we go. This is kind of interesting here. So now I've cut. So I'm cutting everything in half, right? This is Gann's technique. So we're taking the range, then everything gets cut in half, and then cut in half. So we end up with quarters. Well, look at how remarkably precise the market has responded here. Now there are those that look at this and go, "Well, fuck, man, come on, you put enough lines up there, it's going to hit it somewhere." Well, it's not just the fact that it's hitting these lines; it's where it's hitting these lines. Well, here's the one. Here's the A, B. Okay, we got a wick down here that came down to threaten the low. Here's the pivot here, was the only little pause before we continued on. Here's the top of the 3 here. There's 100% back down to this being the 50. Note the midline here, the channel that I just drew here, how this is framing that as it would, right? You can see the range right there. Pretty remarkable that we're popping that so precisely. So something to keep an eye on for a couple things, right? So if we're coming back down here, well, here's the low that's been challenged. If we can come up here again, here's the 100, right? The range expansion of the first swing. As we keep going, now we get some upper targets here. Here's the big target again, right? That 275. So if the 4 is here, or here, it almost doesn't matter. This is what we're after here. And then you would pull back and look at that and say, okay, how would that look with regards to more traditional swing relationships? Is that too far? Is this too much hopium? So sure. Well, let's just do the same thing, but we'll do it with fib relationships. So if we're going to take the length of the 1, now I don't have the 4 yet, right? It could be here, could be here, could be here. But start to kind of line that up here. Oh, well, let's go ahead and just let's use that low there. So if we do come over here, and again, we've looked at this a few times before, we get a nice little hot box up here. Oh, I'd probably do it like that. So from in log scale, that's a pretty good range there, from 338 to 275. So you got a pretty good target up here that would be consistent. So you can kind of see, all right, if we're going to do this, come down here, finish this as a WXYXZ, then up we go, right? 3, you can kind of map it out, and see how we would hit there, and then we'd have this impulse completed, right? And having waded through all of this, which balanced out the 2, and the whole thing falls together, and it just is, textbook Elliott, right? There's just complexity in the 4. It frustrates you, right? Which is why the triangle has been so long part of the thinking here, and this could be triangles within triangles. We're not going to know again until we resolve either down or up. The implication here is we resolve higher, but there's nothing that says that we couldn't have this 4 coming down, right? We're in the clear. We could come down, of course, all the way to that wave 1 pivot. So just a couple of things to kind of keep an eye on in terms of potential support and resistance levels if we start to push higher or lower. So some things I thought I would just keep your eye tuned to. So we can take this off here now and just know we've got that target up here. Let's put it right here in line with our channeling. And this, right, if we come over here, boy, it sure does line up rather nicely. Okay, all that said, because we've been over that enough times, and anyone with rudimentary Elliott knowledge is probably coming to something similar here. I will say though, I've said this before. Some of the very best Elliotticians I know think that that's the 4 and this is 1, 2, and we're off into the 5. I could not disagree any more strongly, but. Right? It's not about being right. It's about being profitable. So my view is that's less possible, less probable. Well, that's all we get is probabilities. Oh, here, let me go to, let's go down to a 4 and see if we can make some sense. Maybe 4. Oh, let's try, maybe that's too much here. Let's try a 3. Now, this gets very, very difficult in here to get a count that plays through all of the substructure, subdivision. I was kind of back and forth with this. I called in the reserves here. One of the benefits of my gig here is that I have some of the best Elliotticians I know, right, that I could find that work with me here. And so I've Sensei Tudum, right, he's a level 2 Elliottician, as is Tony, right, who's the other level 2 on our team. But Sensei Tudum was available, so I reached out to him for a little consult on how we might reconcile what's going on here. Because the one thing it doesn't look like is that we're in some sort of impulsive push off of the low. So I've just drawn a channel here as we see the market wrestling with this resistance here. It's not hard to spot. Now, let me just circle back to this because I think the crux of at least this count really leans into, here I got a little messy here, leans into how we're interpreting this entire move down here, right? So this move, how are we interpreting this? Well, to my eye and to my double checking the swing structure down here, I'm much more comfortable leaning into this as a 3 rather than anything else. So I think this is an impulse here. This is the correction to this impulse. So we get an impulse, we get a sideways correction, then we follow it with an impulse. I think this is hard to argue with as a zigzag. Right? I think that's what we have there. So it would change the count if you were interpreting that otherwise. You could end up with different labeling, how do I say it that way, right? With a different interpretation. But so ideally, wouldn't it be nice if it was WXY, right? And we were done. Okay, well, that's certainly still possible, but this is not particularly the kind of bullish launch, right? If this is the 4, okay, well now if we're going to struggle to start into a 1 to turn the trend around and go from sideways down into an uptrend, well, that's a big struggle, right? This is a big ship to be turning around, or at least to be pointing in a direction other than sideways. Okay, I'm open to that possibility here, but there is nothing here that says to me what I'd be looking for with anything the start of that. So I've reconciled this reluctantly, right? As I've often said, you arrive at a truncation only as a last resort. And I am to a last resort on this count. I can't see another way to solve this here without such a distortion or such a force fit that I find myself back here labeling this exactly how I told you that I didn't want to do it. But I just don't see a better fit. Because if we don't truncate this as the 5th here, this is the count just falls apart. There isn't a count here that makes sense. This becomes such an obvious 5, and that was what was really influencing my thinking. But now, as is so often the case with Elliott Wave, what's come after now is influencing what's come before, because we can't be definitive about this, because this is still uncertain. So thus, you have to make your best estimate here. Now, based on what's followed this, well, whether it's a 3 or a 5, what has followed this is no less illuminating as to how we're going to account this. So having looked at, of course, at least 6 different counts that you might try and work through here, I'm ultimately ending up here at a truncated 5, right? Which is what Sensei Tudum had suggested in some of his work earlier. It was the best fit, because otherwise you got a 5 here, and the 5 here corrupts this count so massively that you end up with just a horrible force fit. So I do think, because I'm so inclined to call this an ABC, a 3 and not a 5, right? I just think it is a 3. Thus, to go 3, 5 here, just the entire count just falls apart. So I put this here because this is, well, it's not there's not anyone with a chart open who can't recognize the resistance there. Now, just because we have resistance doesn't mean we can't get through it. I'm going to just pull this across here, because if I just take all of that corrective action here and I just tag the lows of it, I'm going to allow for this wick to get through. So I'm using the lows here that are the lowest low that I can get here, where we double bottom, and then we got a fall of it. Well, look right where we are here. Oh, shit. Can I get any more? I guess I can't. All right, now we've got this. Oh, God damn it. I'm not going to be able to get any more here. So this is the range we looked at that we've tapped a couple of times, right? So we're kind of just now trying to range out, okay, where are we? So you can see a clear path to break from this, right? We have to get through this. We have to get through and come back. Now it starts to look like, oh, okay, though this was just a long cluster F of trying to get something started. Okay, maybe now. But as it sits right now, if you're forced, and that's what we're always labeling, it's just a moment in time. As it sits right now, that just doesn't look like what's happening. This just looks like more sideways. Oh, let's get you out of here. It just looks like more of the same. I'd love this to break out of here, but I'm not buying it. Well, let me rephrase that. I would never buy it there, right? And I would encourage you not to do that as well. Right now, you can disagree with me, or maybe you're a breakout trader, but as we've looked at this a couple of times, this is the single worst place to enter the market. Now, I know that if this takes off, people are gonna, I'll be full of comments saying, "Well, you jackass, right? Look, you missed the whole thing." I just want to be clear again as to why this is the single worst place to enter the market. All right, so let's just bring it over here. Again, I've shown this before here. So we know breakout traders, let's assume they're going to be right here, breakout traders. Well, what's on the other side of all of this structure here? We know, right, that is going to be the overlap we're going to have here between the breakout traders and the stops of all the people that were short here. Where are their stops going to be? Do we even have to wonder about it? Is there anybody trading with any knowledge of market structure, or stop placement, or where liquidity is found on the market that can't understand where the stops are going to be there? Probably not. Probably not. Right now, there's going to be some people that are new to trading, new to how the markets are manipulated, that may not recognize here, but I cannot emphasize this anymore. That is the worst possible place to enter the market, because you have absolutely no idea how this is going to be manipulated. The most probable event here is that if these highs are swept, it's just a liquidity grab to take it down. Just like the same thing down here was happening here was the worst place to short the market. Right? This is just something you've got to learn. I can't do it for you. I can just show you example after example after example. Just same thing happened here, same thing here, right? This is not where you want to be entering the market. It's exactly where you get bent over. And look what happened here. Oh, sorry about it. Look what happened down here, right? Oh, it's gonna fall through the floor. It's gonna fall through the floor. Same thing's happening here, right? The exact same thing. Now, I'm not saying I can predict the outcome here. I'm just saying this is the worst. I don't want to tell you what to do, but I would just encourage you to think twice about entering here. Now, if you entered down here, different story, right? Not a bad thought to be looking to get short here, actually, right? So think about the risk reward. Where is the risk reward going to be better, right? If you're a buyer here, where's your stop? Right now, well, you're going to use the last pivot low here. Is that, well, you better get a big, this better go to new all-time highs to make that worthwhile, right? I mean, right there, there's just barely 3 to 1. You're getting back to the structure up here. Much better risk reward on the short, right? If we're going to go back down to, well, here, let's just use that. Well, there's 9.8 to 1. Which side of that would you prefer to be on? So if I said, okay, you're going to have 10 trades. 10 trades. Right, 10 out of 10 trades. Which are you going to prefer here? Right, getting stopped out here with that little bit, with that potential, or you prefer that? I know it's counterintuitive, right? So your emotions are saying, "Oh shit, man! Look at that! Whoa, we're broken out. Well, we're at 44, right?" The news media starts to get, "Oh, looks like crypto's on the move, on the march. Here we go." They literally can't feed it to those that know better. They're doing it for them, right? They're just making that enticing to retail traders who don't know any better. They'll eventually, well, two things are going to happen. Either they blow their account out and they do a little studying, right, and they learn, or I mean, they just keep doing it until they eventually learn the lesson, right? So, I mean, I've gone over that so much in the last 6 months, right? I'd like to think, but again, new people find our content here. I don't think there's anyone anywhere with any experience in the market who would advocate buying a breakout there. I could be wrong, right? Now, so, but if you want to get long here, I'm not saying there's not potential here. I'm saying let it break, clear this, and then find out if the bulls now here are going to defend. Do you see here now? If you were buying the breakout, right? If you bought the breakout, right? Now we've talked about this a lot. If you buy the breakout here, are you anticipating that it's just going to keep going, and we're not going to have a retracement? We're just right. It's just game on, risk on, off we go. Given the uncertainty in the backdrop that it's just going to be a straight line, right, to new all-time highs. Is that what Bitcoin typically does? Now, we have these liquidation wicks, right? There are times where it'll just free fall. Tends to be, you'll see it more commonly, these kind of liquidation wicks on sell-offs rather than rallies. Although the rallies, right, more typically the rallies, there'll be a little swing structure along the way here. So, back to what I would suggest is, it's not that this is not a great place to ultimately end up being long, but don't put yourself in a position where this could happen to you. What you want to do is let it happen. Okay. Now, there will be a retrace because the shorter term traders here, let's just use this as a target, right? So here's the top of the next bit of structure you're going to have to break through, right? Because where's the next location where there are going to be stops? Do we have to wonder about that? No, we don't, right? So we know they're going to be there. So the most probable location here, you'd get up here, and there's likely going to be a little defense. Now that could be quickly, right? I'm not saying this with certainty. We don't get certainty in the market. What we get is probability. So it's probable that if we were to get up here, you're going to see some of the bears here defending. That could be it's too strong and they get through it. Or again, there's no certainty here, but that would be a reasonable target for a shorter term trader. Well, we're talking about, let's see, so from 45 to 51, short term trader likely is going to pull a little bit off there, right? At least put some in your pocket. If you did take it long and you got that distance, I'd encourage you to, perhaps at least tighten your stop or put some in your pocket. The question is, what happens next? If we come back to the zone here, okay, you can't know for sure whether that comes, but that's a reasonable place for the market to test because it wants to find out, does a bunch of supply come in here? Or it's, I can't help but think it, right? It's the marathon man, Dustin Hoffman. Is it safe? Is it safe? Is it safe? Or is it not safe? That's what the market's asking here, right? Is there going to be support here? Well, if there's support here, now where's the next target? Right here. Where's the next target? Right now we're after the highs. Now it starts to come together and you say, okay, wait a minute. Maybe if we got that kind of structure, maybe this is, this could be 1, 2, 3, 4, 5, and all of a sudden we're in an impulse. Could be. We don't know. You're not going to know until you see it resolve. So this is right now, The only thing I can say with certainty is that's a much more attractive short than a long. But everybody, market is feeling like it wants to break out, right? But that's the danger of that location, right? It feels like, oh man, look at this. We're coming from, we tapped it down here at 34, and look, now we're coming all the way back up. Ooh, look. I would be very careful getting long there. Just my suggestion. All right, let's dig in there, because I probably drilled on that enough here, and try to keep this one a little bit shorter here. So here, my reluctance to put it here, I am now firmly planting that here on the idea, because it does fit. There is a 5 here. This plays better as a 3, so I'm going to go with it. Right, again, it's not that it never happens. It's just your last resort. I'm at my last resort here on this count. So I'm going to put the A there, and then I'm going to come down. It would appear that we've gone into yet another triangle. This kind of price action here, there are no impulses in here other than the C waves. And they're a little bit loosely defined anyway. So it would appear that we've got an A, B, C, D, E going in, and we're heading up for the C. So this would be A, B, C, D, E of a B relative to this A. So what that looks like, all right, if this is the Y, we're seeking the X here. So I'm going to get there through the A here via the truncation of that 5th, B, C. Now, we could break here. Again, I'm not saying we wouldn't be surprising at all to do that, right? Which kind of plays into this count all the better, right? If we come up here. Now, it looks like we're trying to get this impulse to finish here at the end of it here. Now, this gets a little funky because you got some chop in there, and this is a best... Oh, you're kind of making do with what you've got here. This looks to me like we've got to go 1, 2, and then A, triangle, B, C to get the 3, so I can use that 3 to get the 4, so I can use this 5 here. It looks like, here we are, right smack dab in the supply zone here, that they're not unreasonable to think we could be at or near a top. Oh, we could just same thing. We're here. Let's just kind of try and include as much of this as we can, allowing for the wicks to, pump through. But if we're certainly getting in a range up here where I'd be I would never buy that person, never. Why do I say that? Because I've bought that 100 times before over a 30-year career. Trust me, I've tested it. So now it's just something I would never do. I don't care what happens, right? It's just part of my rules, right? I would never buy that under any circumstance. I would because I wouldn't be worried about it getting away from me. I'd be waiting for the retrace. That's just me, right? It's only 30 years of doing this, so you can learn the hard way, as I did, because I had a lot of people telling me, don't do that. I had to learn it the hard way. I'm trying to help you, right? So you're not as dumb as I was. This is a little sketchy here. It's not the best looking 5 I've ever seen, but we got to make do with what we've got, because this is very, very funky. So, okay, how do you end up with a triangle? Because you can't quite figure out what the hell it is, right? So like, wait a minute. Could this be a triangle? That's how you end up here. Because trying to put an impulsive structure here with corrections that are truncating you can't do it, right? So when you're just completely lost, the first thing should pop into your head, am I looking at a triangle? Am I looking at a triangle? Well, if I was, where would that fit in? Where could I get it? A, B, right? If that's going to be the C of the X. So that's where I think we are. Now, my ego is not such that I would be crushed if I were wrong, because as I've said many times, our objective here is not to be right. Our objective is to be profitable. So as we sit right here, this doesn't strike me as a trade which would give me good odds of being profitable. I'd be much more inclined to be a seller here, as I've said. So if this is the X, what you want to be, if you're inclined the same way, well, at the very least, if you want to be more conservative, I'd wait for some signs of a break here, and then I'd look for the retest on this side in the exact same way that if it was going to break this way, I'd wait for the retest this way. Let the swing structure confirm it for you. Okay. Oh, hey, a little break here. Oh, I got a little change of character. I retrace back. I get right into the pocket here. Perhaps I leave behind a little demand zone up here. It's been run multiple times. Okay, so if you don't want to try and pick the turn here, if you're a little uncomfortable, I don't know, into a Friday, it's a wild card, wait for a lower high. Right? You can even do it right here if we come all the way back. Now, again, consider the risk reward. Okay, let's see. We could use the top of the range here. Reasonable target would be down here to this prior pivot. Well, there's 5 to 1. Not a bad thought, right? I mean, so, what else can we put together here, right? I got my wolf range on here. We can come back in here. We get into where we, oh, there you go, right? So, 1, 2, oh, no, we're going to go to a 3. Well, there's a 3, right? It's going to be, is it going to be, if this is the X, is this, we need an A wave here. 1, 2, 3, 4, 5, A, B, C, right? Those, we don't know, right? But right now, as it sits right now, that's how I'd be approaching this. So look, that's the next trade that I'd be waiting to set up. You don't even have to give it that much, right? You could be a little more conservative. Use the 786, use that pivot high. Now you're at over 7 to 1. Now, of course, if you do that, you have to be prepared to go again, right? So if it comes up here, wicks you out, and then you start to come down here, you got to be able to go again, right? You got to be able to take the jab, and be prepared to duck and then go again. Or if it gets away from you, right, take the 4, right, into the 5, right? Because we're looking for, we need an ABC down here. Now, it could come in a variety of formats, but why would you assume something other than, well, let's start with a zigzag. Okay, we get a zigzag, all right, easy. Bitcoin is rarely easy, all right? So I wouldn't assume we're gonna see easy. I don't know how that thing got locked, but it did. This is a 4-hour, right? It'll come down to a 1 hour here. We'll tighten that down a little bit more. And then I'll wrap it up here. Oh, shit. Maybe we can go even. Let's go to a 15. Do I have the start of something here? Do I have the first inklings of a possible start on it? Well, it kind of looks like it. I'm on a 15. It sure looks like I can get a 5 in there. 1, 2, 3, 4, 5. Put that in white. Okay, could that be the 1 of the A wave? 1, 2, 3, 4, 5. Let's take that. Let's put it in, here, we'll put it in green. Let's go up a degree. All right, same thing you guys would be doing here, trying to get a handle on. Okay, is that a 5? Well, sure looks like I could lean into it. 1, 2, 3, 4, 5. Okay, I need a little bit more here. Let's see if we can put it together. All right, if that's the 1, I know here is prime zone, so I'd come over a little bit over the weekend. You might, maybe, right? So if you got to map something out into the 2. Where's my target for the 3? Right here. That's the 7, 8, or excuse me, that would be the 1, 6, 1, 8. For the 4, I don't want to overlap the 1. Down for the 5. What would I have there? All right, we take this off. Start to stitch it together. A, B, C. All right, that might do it. Here's the other possibility. This is, right, if it's not going to get us far enough, right? We can't assume simple 2, 3, 4, 5. Put that in white. Let's go up. We'll go to micro. 1, 2, 3, 4, 5. Right, starts to come together here. So this, again, we just kind of, you got to place them somewhere. 2, 4, right? If that's the start of it, okay. Let's see what comes. You'll have a fairly good idea if we get a failure swing here, right? So if we get a lower high and then we get a lower low, this is going to start to look like, okay, right? Probably we can put the C up here. Not with certainty, but reasonable if we start to break swing structure here, and you can just wick these off. And we're on a 15-minute. You start, well, come here. Most annoying feature of TradingView. Right, just start wicking them off. All right, we're breaking these. Right, these would, so here's the last low that gave me the high. Here's the low that gave me the high. Right, same thing, right, just all the way down. Where is that key structure? Pull them over. We start breaking this, okay, now, right, so now start to think about putting that all together. Break, right? That's trend change at this degree, at a 15, right? 1, 2, again, 3, 4, 5. You're trying to get something to map out, right? So this will be very telling here. Now, if we just rip higher, okay, right? It's not. It's not what I would anticipate. I would be stopped out here, right? I'm going to take a very small stop. If we go up and do that, then I'm going to wait for this. Suggestion, and again, my guess is there would be very few people that have been around the market for any length of time that would approach this differently. Now, if we were talking about equities, it's a different story, right? Breakout is much more reasonable with equities. But here in crypto, where there's still, we don't have traditional market makers, but we have plenty of market manipulation. I'd be mindful of that, right? Don't put yourself in a position where you can just get bent over, right? It happens to enough people every day. Don't be a victim. Okay, so there we go. How am I doing? That's 35. That's probably enough here, right? There's not much more we can do until we get some sense of resolution. Again, we're still sitting kind of at that key balance point here. We looked at it with the wolf range here, recognizing that we're at very significant levels here. And to get some more certainty as to what's next, if we start to come down here, well, the shorts will be the opportunity. If we break higher, right, and this starts to look impulsive, well, then coming back here for the buy will be the next thought. All right, guys, let's go back to that 4 hour here. We'll wrap it up here. As you guys know, we're working on some new material here, possibly a partnership with another software vendor. We're working on a release of new tools to our futures traders in the ninja space. So a lot of things going on in the background. It does take some time to we were back and forth. I thought we were going to release it today, but we had to make some changes, a few tweaks. It's coming. Trust me, we're working really hard on it. Okay, so we'll have, hopefully, if at the latest, we'll be releasing new material next week and some new content, some new things for you guys to work with. So you can look for that. It's close. I'm sure it'll be next week, by tail end of next week at the latest. Okay, you guys have a good weekend, and we'll be back for a live stream on Monday. Okay, guys, take it easy.